following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Usually it is noon till 1 o'clock. Today it is noon till 1 o'clock because it'll be pre-recorded. Unfortunately, I won't be able to do my show at noon, so I wanted to do it here at 8 a.m., 4 hours prior, an hour and a half before the open. And we're looking at a market that says, this is very interesting, the E-mini is down 11 at 25.48. We haven't seen any down 11s since that was right there on the 25th of September, and then it closed above the 9-period the 9-period exponential moving average. Today it's just under it as we speak. It is in Chapman wave leg D. Peak D is where we start to look at the chance of a deeper correction. Doesn't have to happen, but that's where we look at it. Or it could be an instant restart, as we saw over there, back on the 27th of September. So what we're looking at here is this is the first time that we've seen some kind of selling, overseas influence, obviously, but this happens to coincide with a couple of aspects, which I'm going to talk about. The E-mini is down 11. Let me just run the numbers here, and then we can go to the nitty-gritties. The YM, which is the Dow futures, down 94, having made a peak E at 23,124. Oh, it's not a peak until... So you have to wait all the way through until tomorrow to get a lower high bar. So far, it's a parallel high. So it's still a leg E in the Chapman wave daily. Weekly is in a D. And we've got an E right there in the 120-minute chart. So a bunch of things that we want to look at is what is the chance that this can be called a short-term IBM top? So let's go through that. Because if you look at the NQ, which is the NASDAQ E-mini, you've got, let me get rid of this just for the moment, right here. You've got leg C in the monthly, leg G/C in the weekly, and you've got your D with a doji candle, a heads up right there that says if ever there was a chance that there could be a pullback, a sharp move below the candle of the doji, that's yesterday's low of 61.08. And a decisive close below that says, aha, now you're looking at chance of pulling back. But in all cases, the stochastic is still in the mid-90, 95%, and that is really good. MACD is only turning down. So when I said to my subscribers to my opening call, that's my daily newsletter, we have a number of positions. All of them are looking very good on the long side. We have one short position on the Dow, which we took a week ago today. It held the stop yesterday. It's the inverse of the Dow. So it held the stop that we have. So you buy it long. It's very nice because in portfolios where you have, say, you aren't allowed to go short, but you really don't want to go short. This is a way of buying a long position of a short formation. That is a short, the components, the ingredients are all shorted. And you're buying it on the long side. In other words, you can buy it as if it was going to go up. Your hope is that the prices of all the ingredients are going down, and that way the instrument itself will move higher. So, and that held our stop yesterday. That is a little bit underwater, and actually it isn't underwater right now. It's actually making money. And so what we're looking at is a situation where I don't want to get too carried away, and I'm going to jump to this right away, and that is the VIX index. Now, of course, this is way early in the morning. The market hasn't even officially opened. We've only got the futures to look at for moving objects, and at this particular point, the 77. At this particular point, you've got the VIX rallying really sharply. The VIX is rallying. It went to 1177. Yesterday, it was down in the 10. In fact, it was below 10 yesterday. So I'm getting when I see subscribers to my opening call, especially since this is the 30th anniversary of the crash of 1987, October the 19th, I remember it well. Most importantly, what we're looking at is, yes, you've got your D in the Dow 120-minute chart. But this is very unusual. Yesterday, we saw a spike in the VIX as well as in the stock market. And one of the reasons is that the IBM spiked the Dow very sharply. But the other indices were very poor. They were acting shabby. In fact, the market without IBM might even have closed down under 23,000. But you can't ifs and ands or buts. It is what it is, and it went sharply above 23,000. So that 23,000 level, I still believe, is going to be a magnet, both for support and if it goes under it to come back to it. I think we're going to yo-yo around the 23,000 to 2,800 area for a little while. Could be totally wrong, but we'll see what happens now. What I want to mention is, for the day after an all-time high, especially up in the 23,000 area for the Dow, to get a VIX spiking 14%, it's just too soon. My preference is to see the market have a lower lows and lower highs, lower lows quietly going down, and then all of a sudden this bad news that comes in, and then you get your VIX rallying sharply, and the market drops triple digit in the Dow, strong double digit in the S&P. This to me is a little suspicious. It's a little too soon. However, we're adding a little bit to a short side of it. We're keeping our long positions because they've had really good gains, and I still like the instruments that we have, or the stocks in here and the instruments we have. So that's the way it is. Now, this is going to be very interesting, because if the Dow closes almost at the lows, in other words, if we are down, say, 135 points, which is still 30 points higher than yesterday's big move, 160-something points to the upside. But if we close towards the low of the day, it's going to be very important what happens Friday and Monday, because if we get to a very short-term oversold condition in the market because the VIX is screened in fear to the upside, we could see another bounce by early next week. So this is a process, and I want you to think of it, if you can, think of this as a process. And the reason being that unless there is, I would prefer internal rather than external news. I don't want foreign markets to be dictating what we do, because we are liable just to snap back in a second. I want it to be internal. And this is exactly the phase that I was talking about 2 weeks ago. About a week ago, I said, I think what I'm looking at now is that there is enough potential internally for us to start to see a market that's getting quite hesitant about certain things like tax cuts and a whole bunch of other things that really relate directly to the U.S. markets. That's really what I want. I don't want this to be a foreign thing. Foreign things just in a day, they're all gone. If it's going to be down. The other thing is, look at the stochastic, 95% for the NQ. Look at this for the Dow. This is not the Dow futures. This is the Dow cash. Whoops, where did it go? $INDU. Yeah, look at this. Stochastics at 97%. The Dow will have to fall under 22,800 to really see the stochastic go to the low 80% area. So a lot needs to be done. This is just, as I say, a process. This is the first little shot across the bow. Basil Chapman, we're looking at gold, we look at the dollar, we look at the euro, we look at anything.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians Hour. This is quite a few hours before, 1 hour before the opening, and it's going to be recorded to be on my show at noon to 1. So these are all talking about the futures. This is early in the day. Anything can happen between now and then. But what I am looking at here is that in the 120-minute chart, you see this gap. The gap has a low of 23,086. So until the market pierces that, takes out the 9-period moving average support in the 120-minute chart of 23,074, we can chop, and that's going to be very important. So what the market to change the course of the tide at this particular on the 120-minute chart, I want to see a close below 23,007. Yeah, let's call it 23,070. Look at the MACD. It's still very strong, but it is just curving a little bit over. And this is on the right side, it's the same chart, except this time I've got it with the MACD and slow stochastic. Stochastic's at 98%. That's 2% off 100%. I mean, that is really strong. That's what you look for to sustain a move. So it's going to have to be damage that's done, and then sustained. You have to get a follow through Friday or Monday, because if we close down minus 30 today, S&P is down -2, comp index closes -8, instead of being very sharply lower at the close. All that's happening is you're making a high-level consolidation. And the technicals are suggesting that in the 120-minute chart, in the daily chart, this is the one over here that I show my subscribers every day, discuss all these charts in great detail. We follow them, so if you could, while you are subscribing, you're also learning. It's a course that I give. And look at this, the gap up straight into the Chapman Wave up channel, inside track resistance level. And this is exactly where you'd expect to find some kind of resistance. So we're going to be the MACD is still very strong, and the on-balance volume is over. This is the only clue that I've been talking about for a few days, that the on-balance volume, the blue line, is getting very overbought. but the stochastic at 97% in the daily is still extremely strong. Now, this is what I wanted to show you. Within the context of all the different markets, you see gold is up a little bit. Gold is up $4. Gold should really be up 9 or 15 at this stage if there's something happening in Europe or anywhere in the world that some kind of conflagration, whether economic or physical, and it's just not participating here. And I'm saying to you that I think gold needs time. It had a spectacular move up. It's had a huge move down. It's had a nice retracement from the lows that were made back in December of 2015, around about 1,090. Spikes all the way to the 1,400 level, pulls back again to a higher low. Now it's kind of in leg C in the monthly chart. I think it needs time. That's the most important thing. Now the silver's the same thing. Silver trading at 17.025. Now, if at noon, when my show normally would be, if at that point gold is up $9 to $12 and silver is at 17.025, if silver is close to 0.25 level, and the dollar, instead of holding nicely here, is actually slipping from 93.18 where it is now, down 23 cents, is actually down under 93. That's the Chapman wave lowercase h pattern that says be careful, the dollar's going to test the low that was made at 92.75. We still remain long the dollar from the very low, the 35-week rise and then the 35-week decline in an arch formation. Let me just show you that right here. Look at this beautiful symmetry. Look at that to the bar. I mean, can you imagine from May of 2016 all the way to the high of January of 2017, from 91.92 to 103.82, back down to the 8th of September, exact 35-week low, 35-week high, 35-week low, 91.09. So we went long based on a number of Chapman wave methodologies, but that was the most important thing. And from the look of it, unless something's going to happen internationally, from the look of it, my suggestion is that at best, the dollar is going to break into the 94.70s by this time next week. Worst case is it just chops around. It doesn't break down, but it just chops around here and makes 92 the next support level rather than breaking down. That's the way I'm thinking about it. If you look at so that's the dollar. If you look at crude oil trading down a little bit here, trading down it's more than a little bit now. Now it's down 78 cents at 51.58. I thought there was a chance that we could break just above 53.09, the high that was 29th of September for a leg D. It still could do that, but right now this is not good action on the day. We'll see if it closes more towards the 51.70s rather than the 51.30s. I think crude oil has a chance then to get to that leg D. So this is something we've got to keep in mind. The most important aspect that I'm really looking at here is that the TLT, which is the Lehman 20-year Treasury bond ETF, my contention has been that if the TLT trading at 125.09 yesterday, now it's at 125.60. If it takes out and goes to leg D above 126.09 off this low, this D, in fact, could turn out to be a very powerful move and suggest that if the if bonds rally very sharply, there's a good chance for the first time that we could see money migrate from the risk of equities to the so-called safety of bonds. So at this particular point, we're stuck in the range right here. There could be, there was a gap down yesterday. That happens with anything that trades overseas as well. But a good question, Peaky says, Basil, what is the best chart to monitor inflation? There is something called TIPS. And the TIPS is, there it is. Is that correct? Let me just double check. There it is. The TIP. Now, the TIP is called the iShares TIP bond ETF, and it's actually called an inflationary bond. I used to always talk about it, and then one day I decided, you know what? I've spoken about this for 10, 15 years. It's about time you just went in and dug around and see exactly what it is, because it wasn't matching what I considered to be what I would measure as inflation. No, it's something completely different. So this is what is traditionally considered. I'm going to suggest to you what is the best chart to monitor for inflation? I'm suggesting to you that it's going to be the commodity index will TRCCI. This is the Thomson Reuters commodity index. It is the equal weighted index, and it has this chart that says it's gone to a leg D in the weekly. And I would put this into the category of one of the things that I'd watch. Why? Because if you're having inflation in the commodities, that's going to be recognized in the economic sphere. In other words, how it's measured. But it's a really tough question because the Fed uses. I don't believe that they use the correct things. Of course, we might tell the Fed, but if they had to measure inflation, okay, let me just put it this way. There are two things that are really important in terms of inflation. One is the things you have to have, insurance, housing, whatever it is, that these are the core to the infrastructure of the society. And the other thing is choice. And even in food, you get choices. The things you have to have are absolutely showing inflation. They've been showing inflation for ages. Just look at your bill, look at your telephone, but look at any bill that you look. But now comes the choice of commoditization, where inflation decreases because of choice. I'll be back, we'll talk about that.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So, yes, live show. This show is going to be, this is pre-recorded live at 8 a.m. It will be, so this particular time is Eastern time is 12:30 when it's replayed. Let me just make it clear that what I'm looking at are the futures, and the SPY is down 1.23 at 254. I wanted to show these charts here. This is with the Chapman wave notation. This is automatically generated support and resistance lines. I've had it maybe for 10 years or more. I don't use it very often. I found that the work that I do with my trend lines and all that gives me pretty much the same thing. However, I love to look at it when I'm thinking that we're getting close to serious overhead resistance or under resistance support. That's right. So look, we are looking at the SPY with 256.88, 256.10. The green is the strong resistance in the daily. This is the 10-minute chart. A lot at 256, 255.92. 120-minute chart had 255.60. It went above that, but normally it comes back and it retests that. It actually treats that first as support and then again as resistance. And the monthly has no resistance whatsoever. The weekly has 256.51. What was the high yesterday? It was 255.91. Let me just check out what it is. The high was 255.95. All right. So here we're starting to see strong resistance. Look at the QQQ. The QQQ has 149.18. It's close to the. It went a tad higher than that. In the daily, the 10-minute chart here on the left has a ton at 149.15, 149.21. The weekly has it at 146.83. It went way above that, and then 151.06. And the monthly has no resistance. We're already way past the resistance, but the 120 has a whole ton in the 149s. We're trading at 147.95, down 91 cents right now. Look at the Dow. The Dow, because of IBM, and it's going to be interesting if we're going to be calling this a short-term IBM top. So it just smashed through the daily. It smashed through the weekly. There's no resistance on the monthly. 120-minute chart smashed through that, and the 10-minute chart has 23.171. That's exactly what the high was as resistance, and 23.143 as support, which is about 14 points lower than where we are. Look at the IWM, which was the weakest, and the IWM right now is down. This is pre-market, down 94 cents at 148.58. This started to turn down. You see that red line? It's a band, not a Bollinger Band, but a band. And look at this. Yeah, this is the. Oh, let me just check what it is again. This is the. Oh, standard deviation. That's right. Standard deviation. It's an error. It says when it was done for me, I used some of the generic work that was done previously, and so this is the green says it's a bull mode all the way. Red says be careful, it's starting to turn down. But the 120-minute chart has 150.07. The high was in the 149s, and the monthly it says 145, which it went above, is the resistance just snuck above there. But the weekly has 153.15. So all of these are suggesting that there's a lot of upside resistance. Okay, next thing that I wanted to look at would I look at the triple yield chart? So I'm going to close this workspace. We're out of it. Yes to all, save it. And immediately we go right there. And we grab my LT, the long term. There we go. So what we're looking at here is, I'm not sure which chart will come up first. We're looking at my triple yield chart. This triple yield chart shows the white is the TYX, the T-bond 30-year T-bond yield. This is the 10-year T-note yield, brown. And cyan, light blue, is the 5-year T-note yield, FVX, TNX, and TYX. Look what's happened. It went to a peak A underneath key resistance, and then it pulled back. So right here, it's back in the middle. I used this line. I grabbed this line. I'm going to grab it again. You see this line right here? Look at it. It's a horizontal line. Look how many times we've been here. So yield-wise, This is just no big deal. We've been around here forever. The Japanization of our bond yields is still pretty much in place. This is for the 30-year. Look, for the brown, where we are, we were there way back in 2015, summer of 2015, went way below, came right back, went above it, and now we're right there again. If you're looking at the where we are right now in the 5-year, this is a little different. 5-year yield hasn't been this high since the beginning of this year, and before that, it would have taken, let me squeeze this and you can see what I'm looking at here. So look at this. Steady, down, lower lows, lower highs, lower lows, and all of a sudden makes a higher high and makes a high-level consolidation in a declining channel. And so this is going to be very important. I don't think yields at this particular point are as important because if I'm correct, I want to show you something in the TLT in a minute. There are a lot of things. I was asked about inflation. If you look at wood, which is the iShares Global and Timber and Forestry ETF, it is skyrocketing from 2016, the low of about 39. We're looking at 68. So there's inflation internationally. If you're looking at the Philadelphia Housing Index, makes a low at about 190 something, let me call it 188, I think, 184 back in February of 2016, trading now at 303. There's inflation. So if you want to put it into the category, so what I wanted to say is that the commoditization, no, I don't think the yield curve is yield curve inverting just yet. We'll watch it closely, though. This is something that I always keep an eye on. The triple yield chart gives us tremendous clues. But it's something to note. And what I had said to subscribers is that I believe that the TLT, even though the Fed is talking about raising rates, I think that if you're looking at this particular index right here, which is the TLT, the iShares 20-year Treasury bond yield, stuck in the lower range of the big trading range between 143 and 116 in the monthly chart, until the TLT plunges below 122, this is the 200-period exponential moving average right here, I think we're kind of stuck. I don't care what the Fed says, and I wouldn't be surprised if the Fed says we might have a change of governorship or a Fed chair coming up, so we don't really want to do anything. The new person's going to say, let's hold off. I got a feeling that something's going to happen in late November, in November, that is a little different to what people are expecting. So I'm just giving you parameters. I'm saying if the TLT goes into the 126, high 126 is 127, I think this market starts to pull back as yields go lower and the bonds go higher. This is my thinking right now. All right. So enough with that. What I wanted to actually point out was high-grade copper. We're talking about inflation. Look, there's inflation, even if it's just the Chinese buying copper because they've had a big inflationary run. I think 6.8 or something like that. So if you're looking at high-grade copper trading at 3.16, made that peak D in the Chapman wave on the 16th of October at 3.259, trading right now at 3.165, still in a high-level consolidation. So there are all your inflationary things. I'll be back. Basil Chapman, Tiger Conditions Hour. The futures are down 105 in the Dow, down 12 in the S&P.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. And yes, so this is the pre-recorded show. So I just wanted to say that live, if the Dow at this time, this afternoon, that will be at 12:45-ish, is if the Dow is down more than 60 points, and I'd say to my subscribers to my opening call that if the Dow at 11:10 is minus 60s or more, S&P is down minus 9s or more, then there's a real, and the comp index, the broad comp index, NASDAQ, I would be looking at a pretty good chance of a sharp down close. But if you suddenly have this rally, I mean, just said before, look at this VIX index, right? Oh, let me just do it right here. The VIX index trading $VIX. .X. Look at that. Look at that spike going up to 1177, trading now at 1134. This is live right now, that is, at 8:45 in the morning. This is a little too, I mean, up 12%. And here we are, we're making all-time high yesterday. And the very next day, the VIX goes from under 10 to 1177, 1134 right now. That's just too quick. And you'd have to have sustained news, really negative news, to keep that up, to be able to get into the 13s. So to me, this is, wow, the MACD is good, stochastic's good. It says that, yeah, we should, and I pointed this out to subscribers, that you've now got rising technicals in the VIX, and that's the reason I wanted to get in yesterday. It was just so, I'm not prepared. I didn't want to just grab it and get it within 30 seconds, take a loss. I said, you know what, we've got other instruments, and that's what we're going to do. But I am looking at this and saying, you know what, we might find it's not a one-day consolidation, but we might find that it's a high-level consolidation, treating the 23. Remember, I'm making a big deal about the 23,000 level. I think it's going to be a magnet, both for pushing above and then going under it and then coming back to 23. I think we're not going to break sharply above 23,000 for a while. But that's just my thinking. I don't know. I could be wrong. We already had an IBM influence push yesterday. It took it way into the 23,000. What was that? 170 something. These are big numbers. So what I am going to do is I'm going to say watch what happens at that 10 minutes past 11 Eastern time. I believe that should be a good clue. Now, as far as the VIX is concerned, if the VIX doesn't pull back, if it stays above 11, and at noon, it's still above 11, even if the market's trying to come back, that's going to suggest fund managers are now buying insurance. And as long as they're buying insurance, that's going to put a cap on the upside. Doesn't mean to say that it can spiral to the upside. What it says, there's a cap to the upside, but at the same time, because of the speed with which we just had this, and as I say, I'd like a U.S.-centric negative news event to be overlaying the cloud over the market. If it's foreign, foreign things tend to come and go in a blink of an eye. So this is what I'm looking at. The other thing is, if you're looking at the TNX, let's do it in greater detail. That's a 10-year. You see this 10-year has got this H pattern, lowercase h, looks a little bit like what's happening in the dollar. It came off the low. It had a nice rally. And right now it's down 28 cents. So if the TNX takes out this low of 22.73 from the 13th and TLT starts to scream to the 126s, I think then we're going to see lower lows and lower highs for at least a week or so. Sounds like a lot. In this market, a week? Wow, a day is a long time. So, okay, now within the context of the markets, let's just look at my Dow Quartet. GE, lousy action, down 9 cents pre-market at 23.03, just terrible. IBM, well, I don't have to say anything about IBM other than to say that at 158.63, down 90 cents, it spiraled up 13, 14 points. It went to 161.23. And just the day before, it was trading at 147 was the high, 146 was the low. That is a humongous move. And we'll see if it's going to have the characteristic of a single leg A up, because if IBM takes out the low that was made yesterday on that gap up, 156.95 in the next 3 sessions, as a problem. That's a real problem. If it holds well here, that's going to be good. Triple M is in a high-level consolidation, down 77 cents pre-market at 217.50. This says if Triple M, 3M, multinational conglomerate, daily in G/B, weekly in legs C, I could give it a G, an alternate count, but let's just keep it like that for now. And a leg D in the monthly, if it closes under 216 in the next 2-3 days, that's going to say, okay, short-term top. UTX, which has been lagging but still doing very well, is at 119.18. It's actually down 7 cents pre-market. It's gone to a G/C as well. High-level consolidation, leg A in the weekly chart. Just make it simple. At 119, if it closes under 117.75 in the next 3 days, that says there again, short-term top. So that's the way I'm dealing with it. I love the IBM study, Basil. Oh, thank you. Yeah, so let me just explain something. I want you to go back to IBM coincidentally for a couple of reasons. Look at the monthly chart of IBM. You see this 200-period exponential moving average. Look at the way the monthly in October of 2003, it hit it exactly. And then it rallied to an ABCD, pulls back, goes again, ABC, restart, and then it goes all the way to an F back in July of 2008. That was, so the low was back on October of 2002 at 54. It goes all the way to 130. That's a pretty darn good move. July of 08, smashes down 2008. I don't have to tell you, it wasn't such a good year. And comes down in November, low of 69.50, hits the 200-period moving average. And it goes. Now, look what I wanted to really point out to you. Look at the beautiful sequence. Look at this. Remember I spoke about the dollar, the exact 35-week rally from the low to the high back in May of 2005 to the high. And then it went exactly 35 weeks to the low. So what we've got here is a slightly extended, but look at the arch formation. And it says this rally so far hasn't been all that good for IBM. But it hasn't broken down from the 200-period moving average yet again at 116.90 February of 2016, rallies to 180s. That's a good rally. Pulls back to the 140 level. Now it's at 159. What happens with IBM, because my contention has been I spoke about it a year ago. I said the makeup of the Dow for this particular coda phase, I call it the coda phase, meaning final phase. It can last a long time, but I'm calling it the final phase, before a pretty major decline in time and price. But this can go on for quite a while. Meantime, IBM, this is how we want to rotate through the stocks. GE and IBM will come on strong for that move. GE has a long way to go. So that's the way I'm looking at it. So IBM, I wouldn't be surprised if it starts to pull back a bit, but if it doesn't pull back under 154 in the monthly chart over the next 2 weeks, but instead goes to 165, it has started its move. That's this whole thing about the rotational corrections that we see that make for high-level consolidations, and therefore you don't get your 12, 15% decline. You only get a little bit of a percentage because you're going from one sector to the other, and each one takes place to hold and prop the market up. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, let me just do this real quickly. This is an A. I think it's an A. B, I'm doing it quickly. So C, D, E, F, yep, G. So yeah, G, we're calling it G. Let's call it a G slash A, B, C. A G slash C. So here we go. Let's see if I can do that. G slash C. So yes, USO crude oil is pulling back a little bit. It's down 14 cents at 10.34. But so far, the technicals are still pretty darn good. The weekly technicals are good. You know, I still think that crude oil is going to go to that leg D. So yes, I'm not watching it closely, but unless USO trading at 10.32 right now, down 16 cents pre-market, breaks under 10.25, I think that it's going to try for a leg D above 10.65. So that's why I'm looking at it. The other thing was, what was it? FMC. I was asked about FMC. So in the DAN, yeah, this is, I'm calling this an E/B daily. I'm calling it an F in the weekly and a D in the monthly chart. No, I think it's a C. Wait a minute. I did it a little too quickly. Yeah, look at that. 93. Oh, yeah. This is just a C in the monthly chart. Still looks very good. So, yep, this is looking very good. If you're long, stay long. You got to expect a consolidation. There's a 94.06, 93.75 pre-market. You've got to expect something that'll test the 91-ish, 92 to 91 area over the coming few weeks. It might even hit the 9-period moving average in the weekly at 89. But so far, this is a really good-looking chart. I wouldn't be doing anything yet. If you want to take a little bit off because you've got a good profit, that's fine. But be prepared to put it back about 2 points or 3 points lower. Okay, so in this final segment, before we wrap up, and don't forget, this is a pre-recorded show, so when you listen to it again later on, I'll be back at the regular time tomorrow. In the meantime, back at the ranch, let's do this. I wanted to tell you that what to watch for. The VIX index. VIX trading right now at, let's see, 1121, up $1.14. Under the 200-period simple moving average, way under the 200-period exponential of 1146, but intraday it went to 1177. I'm a little suspicious of a move the day after an all-time high where the VIX skyrockets like this. So I'm expecting there's going to be some buying is going to keep coming into the market. Whether it holds into the close is the big issue. Keep in mind, 11:10 this morning Eastern time, Dow minus 60s or more, S&P's minus 9s or more, and Compunex minus 20 or 15 or more, and that'll be a day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.